Traders are now starting to use artificial intelligence for predictions in Polymarket, and the results are turning some heads. Polymarket, for those who are new to it, is a decentralized prediction market. You trade contracts tied to real-world outcomes, things like whether Bitcoin will rise in the next 5 minutes, who wins an election, or whether a major policy gets passed. Each contract settles at either $1 if the event happens, or 0 if it does not. So when you see a contract trading at 65 cents, the market is saying there is roughly a 65% chance of that outcome. Simple concept, but the execution is where things get interesting. Now here is the thing. This is not a casual platform anymore. In 2026, Polymarket has become a competitive trading arena. The days of making money just by reading a headline and placing a bet are largely gone. The crowd has gotten smarter. High-frequency traders are scanning markets constantly. Information gets priced in faster than most retail traders can even react. So the question becomes, how do you find an edge? That is where AI tools like Codex and Cloud Code are coming in. These platforms allow traders to analyze massive amounts of market data, detect unusual trading patterns, and simulate scenarios that would take a human analyst hours to work through. Two specific strategies have been getting a lot of attention lately. The first is pre-filling bids in advance. Instead of waiting for an event to unfold and then reacting, you use AI to identify the most favorable odds ahead of time and lock in your position before the crowd catches up. Timing is everything here. Get in too early and you are exposed to too much uncertainty. Get in too late and the edge has already evaporated. AI helps you find that sweet spot by analyzing historical bid timing patterns. The second strategy is time-sensitive bidding around market window switches. Prediction markets have trading windows, and right at the transition point between windows, there are brief inefficiencies in pricing. A fully automated bot actually executed nearly 9,000 trades exploiting exactly this kind of fleeting moment, locking in roughly 1.5% to 3% per trade. That added up to close to $150,000 without a single human pulling the trigger. That is not a small number. If you are finding this useful, do us a favor and hit that like button. And if you want more content breaking down where AI and finance are colliding, subscribe so you do not miss it. It genuinely helps us keep putting these videos out. Now, before you start mapping out your trading empire, there are real constraints worth understanding. The liquidity on these short-term markets is thin. We are talking $5,000 to $15,000 per side during active sessions. That means if you try to deploy serious capital, you blow through the available liquidity and wipe out whatever edge you had. This is, for now, a game for traders working in the low 4 figures per trade. Larger desks simply cannot play at this scale without moving the market against themselves. There is also the question of paired exposure, which is another AI-assisted strategy worth knowing about. This involves placing trades on both sides of a market, essentially ensuring some degree of profitability regardless of which way the outcome goes. It sounds counterintuitive, but when AI is helping you model the odds carefully, it can work. The key is disciplined execution and a clear understanding of your cost structure. What AI really does here is remove the guesswork. It monitors market liquidity in real time, flags low-risk entry points, simulates various scenarios, and helps you adapt when conditions shift. The human still sets the strategy. The AI just runs the analysis faster and more consistently than any person reasonably could. The honest takeaway from all of this is that prediction markets are maturing fast. The easy money is gone. But for traders willing to treat this like a quantitative environment, build systematic approaches, and use AI as a research and execution layer, there are still real opportunities sitting just below the surface. The edge is smaller, the precision required is higher, but it is there if you know how to look for it.